Welcome back. You're still tuned into the Medicine Box. Let's continue our focus on the diagnostic space and listen into Fortis's plans for their diagnostic vertical, SRL Diagnostics, which in fact might go in for an IPO. SRL has been an important and integral part of the business, but the PEs have been wanting to exit for quite a while now. It's been even pre-COVID. When do you think they will probably exit? Do you think that you'll maybe go for an IPO?
So we have had an arrangement where we had entered into a new agreement with the PE providers, so pre-investors, where we had agreed to a situation where by 2024 we would either go for an IPO or we would have an alternative mechanism of acquiring these their shares. So that plan is intact. Of course, if 2024 we have to go for listing, then we have to start preparing next year. So we definitely would.
If they find an exit, will you still list?
If there is an alternative path, then obviously listing will not be there.
Okay, so maybe there could be a listing for SRL by 2024.
Yes, because we strongly believe in that business and we believe that it can be built, the further value can be built out of it, and that's why we are.
But the margins are lower than peers.
Yeah, so see, this business has grown through acquisitions and over the years. We were one of the early starters. So now there are a lot of initiatives we have taken. We are increasing the presence of our contact centers, our places where we can take samples from. And at the same time, we are also working on making efficiencies and rationalizing the lab network, for instance, improving the TAT, improving the digital experience, improving the home collection piece. Those are some of the areas on which we are working.
Where do you see margins going for SRL?
See, it has become an area which is slightly competitive. And because of that, the margins are under a little bit of pressure, but we expect them to be above 20%, about in the range of about 22-23%.
But slightly competitive. Right now, you have online aggregators, you have other hospitals, you have standalone labs really clicking at your heels at this point. How difficult is the diagnostic business?
No, look, whenever a business evolves and there are too many players come with differentiated models, there will be a little bit of pressure. But if you see already, there is some degree of rationalization which is settling in especially in terms of pricing. You cannot have a model which is exclusively based on discounting. So that is changing, and because that is changing, we are seeing that the pressure is relenting. How much it is relented is for all of us to see, but definitely some of the steam of that early exuberance is going away. Yes.
But do you think that you are in a situation where you can eventually take some price hikes when it comes to diagnostics now?
See, we have maintained the prices. Throughout this situation, the prices have not gone down. Okay. So that itself, in my view, is a good thing because in any industry, the aim is to get the prices down, especially in a consumer-facing industry like diagnostics. The idea is to keep the prices where they are. But some degree of rationalization will be required. Maybe some of the tests would cost higher and some of the tests may cost lower.
That was the word coming in from Fortis. Let's end the show with Apollo Hospital's Suneeta Reddy. The company plans to expand its diagnostic operations and is in fact also open to acquisitions. Are you looking at acquisitions in the diagnostic space? Considering what has taken place, you all have big plans in diagnostics.
Yes.
You all are looking at around 500 crores in terms of revenue, probably scaling up to around 1,000 crores in 3 years as well. Are you going to do that organically because of the competition?
It's so easy and scalable, the diagnostic business, that you really don't have to make big acquisitions. It's like pharmacy. We only did one acquisition, but we have 5,000 pharmacies and we are the largest player. So I think in diagnostics, maybe some small acquisitions the team might make. And the reason we do this is because economies of scale. We're setting up a very high-end genetic lab in Hyderabad. So it won't be the regular tests. We'll do the difficult complex testing, especially for oncology cases, which will mean better margins.
But is that the future of diagnostics? Because there's so much competition. If you look at the online aggregators, if you look at hospital labs, standalone labs, 100 rupee tests by an online aggregator, that's how competitive the industry is. What is your sense in terms of whether or not that's going to be lucrative at the end?
I think we've always differentiated ourselves by a clinical offering. Like I said, we will be a player at scale in diagnostics, but we will have all the high-end testing, and that will give us the margins. So currently we're at 13% in the diagnostic business, which is a healthy margin. But I think moving on with us opening out at scale, having created these labs, we have more than 2,000 touch points. So I think 1,000 crores of revenue and a healthy margin is something we would expect to see.